Don't forget, you can reach the latest episode of Potomac Watch anytime. Just ask your smart speaker, play the Opinion Potomac Watch podcast.
From the opinion pages of the Wall Street Journal, this is Potomac Watch.
Welcome back. The IRS has released new data on who pays the income tax and what shares of the income tax. This is data for tax year 2020, since there is generally a lag when the information is put out. And I would direct people to the Tax Foundation's write-up of this material, which is pretty clear and I think pretty comprehensive. But there's two things really that caught my eye here. And the first is the shares of the income tax and who pays that and how it's changed over the past 2 decades. So let me start with the taxpayers that are in the top 1%. In 2001, they shouldered 33% of the income tax, providing that much of the revenue. In 2020, it was 42%. So over the past 2 decades, that has grown. The top 1% is picking up a greater share of the income tax revenue. And that's also true for a few of the higher brackets below the top 1%. The bottom 50% of taxpayers, as of 2001, paid about 5% of the income tax. Now it's 2.3%. And just to make sure we're not talking about only those people, I think this is also a story of the middle class. People who are the taxpayers who are between the top 10% and the top 25%, as of 2001, paid about 18% of the income tax, and now it is more like 14.8%. And so, Kate, I think that is really fascinating data and blows up some of the political rhetoric that you hear in Washington, and particularly related to the idea that the income tax is being massively dodged by people at the top of the income spectrum, and those folks aren't paying their fair share.
Yeah, Kyle, I'd say a few impressions here are important. The first was to your point about the top, which is we're in an unsustainable situation where a small slice of the tax base is paying an ever-expanding share of income taxes, and that's not sustainable as a way to run a government. I think to your point about political perceptions, we see articles about billionaire tax rates that just sort of calculate what reporters might like to pay as their 30% of their net worth or something, which is not how we calculate income taxes. Most of net worth is, for instance, tied up in the market, still doing work. We don't count it as income. So that is just a fiction about how income taxes work. So here you do see that we have the top 1%, 5% are paying an enormous share of taxes, and we don't have any sense from the left what would be considered fair. On the middle here, I think a really interesting point here is that the middle share is also declining. Both parties in tax reforms are somewhat responsible for that. We have seen expansions in the child tax credit, for instance, which is currently at $2,000. That doesn't start to fade out until $400,000 for married couples. And the whole point of the child tax credit really is to goose the tax tables so that tax increases are easier to pass and they don't affect suburban constituencies who won't like them. So that also, we've seen some meddling with the tax code in ways there that have made that burden go down. On the low income part of the distribution, you also see we've made the tax code a way that we administer social safety net programs. The child tax credit is an example of that. The earned income tax credit is an example of that, which might not be how you want to run those programs. It would be better to have them run as separate spending programs instead of trying to push them through the IRS. But that has created just this bifurcated system where high earners are paying a lot of taxes and on the other side, getting tax refunds. So I do think this deserves more attention as a growing problem that is bad for the country politically and fiscally, just not sustainable.
The other table here that jumped out at me is the average tax rate. And we'll just look at 1 year here, 2020, the latest. And this is defined as the percent of adjusted gross income paid in income taxes. And so that tax rate for the top 1% is 26%. So again, I think that you hear a lot of stories, one-offs, anecdotes in the political debate about so-and-so businessman and his IRS records were leaked or hacked. And look, this year he paid zero income taxes because he had some losses or some deductions or whatnot. But if you look at the top 1% broadly, the average income tax that is being paid here in 2020 is 26%. And in the data, the progressive rate structure of the income tax, it couldn't be more obvious. The next bracket below that, the average rate is 17.5%, then it's 13.1%, 9.5%, 6.5%, and then the bottom half of taxpayers are paying an average rate of 3.1%. And Kim, 2 points I would make. One is that the rates across the board after the Tax Cuts and Jobs Act, that was the 2017 Trump tax reform, the rates across the board are a little bit lower than they were before, but there is no obvious giveaway to millionaires and billionaires here. And two, to the point that Kate makes, there's a lot of conversation in Washington about making people pay their fair share of taxes, and nobody ever says what they mean by that. And I would like an answer to that question. Again, to repeat the figure, the top 1% in 2020 is paying an average tax rate of 26% in income taxes. That's not counting payroll taxes. This is not counting sales taxes. It's not counting state taxes. This is just federal income taxes. And if more than a quarter of your adjusted gross income going to Uncle Sam is not a fair share, I would like to know the answer of what they think a fair share is.
Well, the answer to them is always just more, right? Because there isn't enough money in the world to sate their spending appetites. And this is why it was one of the amusing aspects when they were still trying to pass Joe Biden's Build Back Better agenda, is that when you looked at the real cost of that, not the cheats and the gimmicks that they were using, but there weren't enough billionaires in the world to fund that level of spending in the perpetuity as they wanted. So that 26%, by the way, just as a figure, is 8 times higher than the 3.1% in the bottom half of taxpayers. And I think it's worth going through a little bit more what you just mentioned, Kyle. So you have that 26%, then FICA taxes are another 7.65%. Higher earners are also usually subject to a Medicare surcharge, which is an Obamacare surcharge, which adds a little bit more. And then if you are living in one of these high tax areas, say New York or California, you could easily be paying another 10 to 15% in taxes, whether it's sale taxes or state income taxes. So you're looking at a scenario where people, if they are living in certain jurisdictions of the United States, could be giving half of all of their earnings over to the federal government or to the federal and state government every year. That's just astonishing. And that's where you get to this argument that at a certain point, it becomes the law of diminishing returns. And that's what we know from supply side economics. You tax people more. Sometimes the response is to either shelter income more or to pay less. And that's one of the other really interesting findings that comes out of this tax foundation document you mentioned, is that while everyone's rates went down a little bit in 2017 because of the Tax Cut and Jobs Act, we saw that work the way it was supposed to work, in that people worked more and the economy grew. And as a result, revenue has gone up. So, that's the other big argument from Democrats always is, tax cuts are just giveaway and robbing the federal government of dollars. One of the things the foundation notes is that in 2017, in this data, taxpayers reported 1.6 trillion more in income and paid 107 billion more in taxes compared to 2017, despite the lower tax rates. And that's because those kind of tax cuts is what inspires economic growth.
Thank you, Kim. Thank you, Kate. Thank you all for listening. You can email us at pwpodcast@wsj.com. If you like the show, please hit that subscribe button, and we'll be back tomorrow with another edition of Potomac Watch.